Oh man, so Bitcoin is slightly in the red today after picking up some support yesterday from 39,200. But it wasn't great because we have lost the 40,000 level mark. But Shark Tank investor Kevin O Leary says there is a wall of money, a dam of money waiting to enter the crypto market. We're going to cover that off. We're going to look at the Bitcoin chart, see the key levels that we're looking at. Are we going to head lower? If so, to where? Or are we getting ready for a reversal? We're going to look at all of that and more. So make sure you hit up the like button. Don't forget to subscribe. These videos are brought to you by me. Yes, check out our course member live streams, ijaz.uk/member, where we have 3 times weekly live streams to discuss crypto. We can do technical analysis on your favorite coins, critique your portfolio, and just answer any other general questions you have in the market in real time. Right, let's get straight into the charts here, guys, because as you can see, Bitcoin fell from our big triangle, right? We had a descending triangle at the top here, which was our failed retest. We came straight back into our larger pattern, and we broke to the downside of the pattern. And now we're desperately looking for support. We're seeing a little bit of a rally here, intradays on these last couple of days here. But is that just a calling off before a bigger move to the downside? That's the question. We know the technical target tends to be for the breakout of a wedge like this. The worst case scenario is to bring you all the way to the bottom of your wedge, which brings you back to $34,000 territory here on Bitcoin. But it doesn't mean we're just going to head straight there. We've got some key level of supports which we need to hope can help us reverse here on Bitcoin. And the first one is where we're at right now. We managed to get a little bit of bounce from this yellow line here, which is at 38,200 roughly. If we lose that level, you then need to look at this pivot point here, which starts to come in at around 37,800, and then successively you want to look at the next pivot point down here, which is about 37,000, and then you work your way down. Okay, so hopefully we can pick up some reversal at some of these points. Unfortunately, if you look at the candlesticks, volume's starting to fall now, starting to fall over the last couple of days here, which is showing a bit of exhaustion from the bulls and the bears. We need to decide on a direction shortly. Now, as you guys know, we've been covering this off quite in depth. The market is moving based on the stock market. So anybody sharing certain other chart patterns or other premises that they think is moving Bitcoin, that's not what's happening right now. The correlation to the S&P and the Nasdaq is 0.9, right? That's on a scale of -1 to 1. This is hugely correlated. So it's just waiting to see how is market performing, and then it wants to follow the market. So if we look at the pre-market, we're about an hour away from the US opening up, and we can see the Dow Jones looks set to open up flat. We got a little bit of green showing on the S&P and the Nasdaq as stock futures try to now anticipate what's going to happen with earnings season, because earnings season kicks off today, and that is where the focus is going to be, because now the market's going to be looking at, okay, how do these earnings come in? And the reality is we're expecting earnings to be quite bad, but maybe they're not going to come back. Maybe the earnings will actually come back not as bad as we think, because everybody expects Q1 to be a horrible quarter for companies, and maybe they can come in and surprise us to the upside on some companies. Now, the other thing which is going to be really vital is when we're looking at the company's earnings, it's going to be about the forecast. What are they giving us as indication of how Q2 is going to be? Because that's where we need to get an understanding of what impact are the interest rates having, what impact are any of the supply chain shocks having, commodity prices, and the rest of it. So what are they seeing on the ground level? That's going to be important. Markets are going to respond to that, and crypto is going to be correlated to that. So really important that we understand that. We cannot ignore that. If we take a quick look at the fear and greed index, we can see we're at 25. The market is extremely fearful right now. As we understand, we've come to understand that anytime Bitcoin wants to fall below 40,000, the market really starts to lose and panic. And that's where, our little bit of experience, our little bit of time in the market and training ourselves from a psychological perspective really pays off. So one thing I wanted to show you while I'm on the daily chart is I wanted to pick out the VPVR. I want to show you where the volume starts to come in at the market. You can see here where we fell quickly here on the VPVR. You can see how very little volume is traded from that period. So as soon as we lost the level of 42,000, it makes sense that we fell all the way back down to 39.5-ish, 38. Because there's very thinly traded volume here. The support does start to come in roughly where we're at, and we saw us creating a little bit of a bounce. So this is going to be the next level, depending on how you want to think about it. Either we bounce from this level, or this is the level that the bears need to beat, right, in order to drive us down to the price targets that some people are saying 20,000 Bitcoin, right? I think all of those numbers are a little bit premature right now. If they come into play, I will mention them. But right now, we don't need to worry about those low numbers yet. Let's take this step by step. Our first levels we need to be looking at, just remove that annoying VPVR. The first levels we need to be worried about are these pivot points. Can we pick up any support from first where we're at now? If not, these points here. If not, then we're heading to the bottom of the wedge. So let's focus on that. Let's see if that plays out, and then we can start moving onwards. Now let's zoom in a little bit. Let's take a look at the 4-hourly chart. And what I'm worried about here on the 4-hourly chart is, like I mentioned yesterday, is this just a little bit of a consolidation before a move to the upside? You've seen this a good few times now on Bitcoin, and any asset moves like this. Big move to the downside, bears become exhausted, they call off, and the bulls are able to maintain a little bit of support, but nothing moving in that direction. We then see another move to the downside, and then they get exhausted, they call off a little bit. Then they go in for another big move. Is this just a calling off, or is this a reversal pattern? Now, the difference here is we're seeing a bit more of movement here, right? This is creating a bit more of a descending triangle / diamond pattern, depending on how you want to see it. So if you want to see this as a small descending triangle on, let's say, the hourly, you could argue that's what we're seeing here. Okay, so you can see we bounced here off this 39,200 roughly line here. Is this a descending triangle, which, by the way, majority of the time breaks to the downside, but it still has a third of a probability to break to the upside as well? And if we could break to the upside, that could give us the reversal pattern we need. So that's what we're looking at here right now. Clearly, we're in a downward trend. Clearly, the bears are in control, and the bulls need a key area to build some momentum and try to get out of this reversal pattern, right? This is not about a big move to the upside. It just needs to grip onto a little bit of strength to start rotating and really nullifying the move to the downside. But sometimes, like you've seen here, it's just a consolidation before a bigger move to the downside, and that's what we need to prepare ourselves for here on Bitcoin. Because if we lose 39,200 roughly, you're heading down to 38,500, and that's the level you'll then be looking at for some more support. Okay, now a few other things I wanted to share with you, and the first one I was looking at this morning was this, which is the number of accumulation addresses. You guys can see the number of accumulation addresses on Bitcoin, and you can see this is really healthy growth. And sometimes when we get stuck in the weeds of just looking at the price charts and looking at the hourly and looking at the 4-hourly, which is all important, and we marry it up with the fundamentals as we always do, we need to look at some of the on-chain metrics, and you can see that the number of accumulation addresses continue to go up, which is just showing that we're just getting started. We're just getting started with that momentum, and that is where our friend Kevin O Leary comes into it, because Kevin O Leary shared that there's a massive wall of money waiting to enter Bitcoin and crypto markets, according to Shark Tank investor Kevin O Leary. Let's take a deeper look at what he said. And he says, I'm coming to the conclusion, particularly after the feedback from the institutions here at Bitcoin conference, that we will take any regulation. Give us anything. I mean, we're going to make the assumption, because it's bipartisan and they've taken so much input from the. If we keep going, you'll see here, we're not even in the game yet. When you talk to sovereign wealth and large pension, nothing. Primarily, it's private wealth, family wealth, it's hedge funds, it's certain small institutions that used to buy the public trading shares of Bitcoin miners. That was just Bitcoin miners, not spot BTC, remember? But now they're worried about the carbon audit issue. I don't see it yet. What we really need is the SEC and US regulators, and then the allocations will start, primarily in Bitcoin. Easiest way to do it would be to do what the Canadians did, is simply allow the first American traded Bitcoin ETF. We know that, guys. We're waiting for that. That would be huge. It would be purchased as a security into mandates that are already set up to purchase securities like shares, because they do not have to buy Bitcoin. They do not have to set up a separate wallet. They could simply say, okay, here is a true ETF with the underlying actual Bitcoin, and we can simply allocate 50 basis points to a $100 billion mandate. Super easy, guys. And this is what he's saying here, right? So if you take a read of the article, in essence, what he's saying is there is a huge dam of money. Is that the institutional capital is like a giant dam, a wall of money that can't invest yet? Huge sentence here, and he's absolutely right. Like, if we talk a little bit about a certain company having a bit of Bitcoin here and there, this is nothing, right? In terms of retail investors, we still have nothing. We're nowhere near mass adoption, let alone with institutions, which historically take longer, right? They've got more regulation to fight with. They've got a lot more to consider. I mean, with Bitcoin, we know the issues that Michael Saylor faces doing what he does, right? It's so difficult for him to do, but that is why he's an early adopter. He's having to, for example, as a basic accounting principle, he has to write off any movements to the downside for Bitcoin. He has to show on his balance sheet. Any moves to the upside, he can't mark that to market. So it's absolutely crazy. It's very difficult if you're an institution to have any crypto exposure. Yes, they were buying a little bit of the mining companies, but ever since the carbon issue, like Kevin O Leary is saying, they stood well away of that. So the best way would just be to get a transparent ETF that they can go and purchase. So that is why we know getting that spot ETF will really be huge for crypto, and really going to be huge for the macro move longer term. Now, let's get back into the Bitcoin chart, because I just want to spend some time on the weekly, because sometimes we focus so much on the shorter time frames, let's just zoom out and remind ourselves of the journey we're on. And this is the journey we're on. And it's important that we spend time looking at this chart every so often, because what's happening now is we've created our high here of 4,000. We then created our low in the summer of 2021 at 29,000. We created a new high later that year in November of 69,000, just shy of 70,000. And then this in January, we posted our low where we managed to rotate at about 32,900, call it 33,000. Okay, so we created our higher low. This is good. We're on a very slight uptrend here. Now, the key is going to be if we come down now, we just need to hold higher than this. If we can rotate anywhere before 32,900, that is good. If we fall lower than that, things start to get a bit worrying, because if we see this scenario play out, if we see something like this, then we're seeing weakness in the price. Okay, we do not want to see that here on Bitcoin. Any rotation before then will be taken as a positive, and we can start working our way to the top of the channel, where hopefully we can then post a higher high above 70,000. That's what we need long term, and we need things in our way. Now, the thing worthy of note is the market is quite different to where we're at here. Things were quite bad in January. There was a lot of unknowns. There's a lot of worry about the tapering and the first interest rate hike and what's going on. The only challenges we have now, which we didn't have then, was the Russia-Ukraine war. But I don't think that single-handedly is going to be enough to push us all the way past 32,000 to the downside. I think the markets are feeling fairly confident. I think we've seen a bad couple of weeks here on Bitcoin because the stocks weren't doing so great, right? They're worried about the inflation. We had the Fed coming out, giving a bunch of fear, and obviously the CPI reading yesterday, which had a bit of, positive nuggets in there as well, which hopefully the market can use as an excuse to start rotating to the upside. So longer term, things are still looking good. If and when we create or post a lower low, then I'll let you guys know that things start to become a bit nasty here on the weekly chart. But otherwise, we're still in a very slight and delicate uptrend. Bringing out the EMA ribbon, you can see here, this is what's giving you the view that this is a very delicate trend, and almost you can argue this will start to become a sideways trend if we're not able to start getting above our weekly EMA very soon. You can see here, we tried to break above it. We had a move at the end of last year, and then we fell back below it. We tried to break above it again just a couple of weeks ago with this nice green candle, but then we've just got sent back down below the EMA ribbon again. So there you have it, guys. A very carefully poised market. We've got to hold these key levels right now, and Bitcoin's just going to work its way through support levels and try to create that reversal nice and slowly. The market's going to open up in a little while, and it's going to take direction from the market. If the market can have a good week, Bitcoin can have a good week and save itself from some of these lower lows. But in order for us to have a good week, we're going to need earnings to come out quite positive. We don't, but then here's the double-edged sword, right? If earnings come out too positive, that's going to fuel inflation fears. So we need good earnings with good forecasts for Q2 earnings as well. That's going to be key for the markets. The markets want to hear that, they're coping with the interest rate hikes, everything's looking good, and that companies' earnings are continuing to do well. As always, guys, if you appreciate this blend between technicals and fundamentals all in one neat little video, smash up the like button. Don't forget to subscribe. As always, if you like my perspective, consider checking out the course member live streams, ijaz.uk/member. Link is in the description. What I'm going to do now is I'm going to link up the videos to yesterday. Make sure you go watch that video to understand what the CPI reading was, what it meant, and why there were a few green shoots, which could give us a way of rallying. This is our chance, right? Can we rally between now and May the 4th, which is when the next FOMC meeting is? Again, like I've mentioned, I expect a slight decline just before the Fed FOMC meeting on the 4th of May. I do expect a little bit of sell-off, but can we have a rally between now and then? That's going to be very interesting to see. Thanks for watching, guys, and we'll see you in the next one.